Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. I'd like to bring some charts to you today, and the first one I'd like to look at is the euro against the dollar. Here we have an unusual, if somewhat rare, but nevertheless nice to see, bearish inverted hammer pattern yesterday. This continues to be the follow-on to Monday's key reversal down, and there's also a second consecutive close below the medium moving average, which is currently 111.14. It also sets the stage for the last 3-4 weeks action being a possible double top. More on that as it develops, as we have a more pressing action to deal with. We may be on for a weekly key reversal this week. A close below 110.70 or above 111.75 and would be on. A weekly key reversal down may go some way to temper the monthly key reversal up we saw in October. Today we've dipped lower, below the lesser recent Fibonacci line at 110.64, but so far reverted back up again. The next chart I'd like to look at is cable, aka sterling against the US dollar. After last Tuesday's indecisive doji cross, the market yesterday reverted back to copying last Monday's action with a bearish engulfing pattern. Currently the market remains within the overhead middle time, currently 130.13, and the lower time, currently 126.81, the same old recent bullish September to October Andrews pitchfork. Watch that relationship carefully, as the last few weeks' action is now posing a question or questions to the market. Is the action a bearish halfway hesitation, or is it a bearish topping action, or is it, I suspect, way too early to know as yet? The next chart I'd like to look at is the euro against sterling. A possible bullish harami yesterday. However, there has not really been much of a follow-on higher, as the market still seems trapped within the this congestion zone dating from March to April this year between roughly 85.20 and 86.80. We have the middle time currently at 85.86, nearby of the bearish August to October Andrews pitchfork. Though it is having a reduced impact, it seems, as time moves forward. The next chart I'd like to look at is the US dollar against the Japanese yen. A bearish harami yesterday, but only just, as the market decided it did not like being below the long moving average, which is currently 109.02. As well as this, close to the super keen and ever so mildly bearish middle time, currently 109.26, of the November 2017 to October 2018 shift pitchfork. Today we've dipped further, a second time below the important 50-cent Fibonacci line of the old 2016 move at 108.86, but again, at least so far, reverted back up again. Interestingly, the market seems currently caught between the middle time at 109.26 and the 50% Fibonacci line at 108.86, with the long moving average doing whatever it needs to on a closing basis. The final chart I'd like to look at is the Aussie dollar against the US dollar. A bearish double yesterday and a proper punch below the recent 50-cent Fibonacci line at 68.75, though no close. We may have the beginnings of a counter to last month's monthly key reversal up. It is a possible double top, a horn type, formed over the last 2 weeks. It is a nascent in construction, but it's still there. This ties in with the significant overhead resistance of the May 2019 to date downtrend, which is currently at 69.38, and its partner, the long moving average, currently at 69.45. Whilst below we still have that 50% Fibonacci line, and not far below that, the medium moving average currently at 68.49. So in the meantime, good trading.